Right. Okay. Ready?
I'm ready.
Ready. Then in 3, 2, and 1.
Hey, folks, welcome back to your Frederick Real Estate Update. I am Darren Ahern with RE/MAX Results, bringing you over 23 years experience in the Maryland, PA region, and we can also help you find great referral partner agents all over the country to help you with top-notch, professional, amazing service and experience that you'll love. And I also have with me, as always, from Presidential Bank Mortgage, Mr.
Terry Kernan.
Hey, buddy.
How we doing?
All right. What a beautiful week.
Unbelievable week.
Yep. Leaves are peeking out and beautiful, beautiful. I know we were both down in Ocean City at the Maryland Association of Realtors conference there a little bit. And seeing the beach in October, I don't see it too many times, but when I do, it's always good. And the sunsets are amazing. And it's nice because you can walk around and it's not, too crazy 98-degree hot. So there you go. How you been?
Good. The conference we were just talking about, and, a little slow, little quiet. But the feel was that it's not just Ocean City. I talked to some of the other vendors. Mm-hmm. So we had a booth at the convention.
Yep.
And it was pretty slow, and talked to some other vendors that do it at every real estate show across the country. And they said that things were down considerably all across the country. So that's a little worrisome.
Yeah.
A little worrisome.
A little low.
Yeah. So, interesting.
The problem is we compare everything, Terry, to 3 and 4 years ago when it was the highest ever, the most sales, the lowest interest rates, the this, the that. And that's what's wild is I don't think in the history of real estate we've ever seen the market go from growing the way it was, hit 2019 pre-COVID, then the COVID years, and now this. And that's why everybody's like, how does this happen? Normally the trends last longer in the whole 9 yards, So what are your thoughts on that?
My thoughts are, here's a couple things. First of all, rates were approaching a 3-year low. So you just said 3 years ago, when things we are approaching right now a 3-year low. We're inching towards a 3-year low. We're almost there.
Love it. Yep.
So that is causing some some enthusiasm.
Oh yeah.
Amongst the buyers. Let's talk about, I was reading about a survey. They did a housing survey, a housing market survey. 49% of the people that responded to this survey felt that it was a buyer's market right now.
Wow.
49%.
Neck and neck. It's a horse race now.
So I think a lot of that is because we are in a lull.
Yeah.
We're seeing a lull. The one thing good about a conference is you and I deal mainly Washington, mainly. We can do all over, but our focus group is usually Washington, Frederick, Montgomery counties, kind of that swing, maybe a little Howard, but talk to a lot of agents from like Cecil County, Hartford County, talk to agents from Delaware that were at the show that were also licensed in Maryland. So it was real interesting to kind of get the feel. And, there is that feel that things are starting to swing a little bit towards the buyer, right?
Yeah.
Why?
Oh, yeah.
Rates are coming down, so buyers are kind of sitting on the sideline and they're not going out and buying. So the demand is not there. And when the demand is not there, the sellers kind of take a little bit of a pause, I guess, in what's going on. So that's kind of what I saw, and it was always good to talk to people from other counties and even from the state of Delaware.
That's what I mean, getting demographics and seeing what everybody else is experiencing. As a whole, it makes you feel like we're not unusual. So this is your weekly dose of real estate and mortgage good news and all kinds of news and everything we're going to share in between, right? All right, Terry, let's do the numbers. That's good stuff. We're going to hit right on into it. Active homes for sale, 672. Last week was 675. We lost 3 homes. They fell out of our pocket. I don't know what happened to them, but they're
all right. See if we can find them. Let's get above 700.
Yeah, we were like, we're getting there. But now it just seems like the whole seasonal thing is no doubt going to kick in. I have a few listing sellers coming up on the market here pretty soon overall in the next month or so, we think. But as a general rule, I'm not overly surprised, but there's still enough inventory, which is good. Coming soon, 47. Last week, 49. So there's that calm. There's that nothing has changed in the last week practically at all. And so I won't be a bit surprised if we see, Terry, in the next, say, month or say November, we get closer to Thanksgiving, that number even gets down there to 640, 600 maybe. I don't know if we'll drop below 600. That'd be really kind of interesting to start off into next year, but we'll see what happens. But under contracts, 425 sold in the last 30 days.
This is the number I always listen to.
313.
Okay.
We're staying above there.
Staying above 3.
Yeah.
So
and
that's
then
a pretty good market.
Yep. And then the list of sell value ratios is down to 97.6.
Now that 97.6, and I know I always remind people what that number means, but what that number means is that the average sales price is 97.6% of the list price at the time that it went under contract.
Exactly.
So it could have been listed at 550,
right,
and then dropped down to 525, and then sold for 97.6% of that, or 520.
Right.
Right.
Oh yeah.
So that's how that number works. So that number to me, so the two numbers that I listen to them all, but that number is the one that really talks to me about, and that kind of backs up the survey of 49%, where people are starting to say, okay, the sellers aren't getting 101% of the asking price.
Oh no.
They're getting 97.6, and I can't remember when that number was that low.
Yeah, I'd have to look back. It's been a while since we dipped below 98, really. It's probably been 6 years, I'd say.
Yeah.
Yeah, I'd say not 2018, I bet, or 2019. If I look, I can do the data. But
so our county is kind of reflective of what that 49% survey.
Yeah.
And that survey is saying is that, hey, things are starting to be a buyer's market.
Yeah. The other thing that's really interesting and everybody needs to understand too is not only now here's the thing. There are 25%, I bet, 1 out of 4 homes, they're still getting full price or multiple offer.
Okay.
It's only because the seller was smart and they went ahead and were on the aggressive side of the equation. They didn't listen to Zillow. They didn't listen to Uncle Bob. They went purely on their agent's advice for the most part to make sure that there was a really good chance they weren't going to sit on a market long. They had a good pricing strategy, good marketing strategy. They did it like perfect. And that way the buyers that are in the market, they will pay more than the asking price if they all perceive and they all realize, wow, this is priced really, really good, because they're not stupid. So now you have a bidding war and it goes up. So about 25% of sellers, you're getting at or above asking price. 75% are overpriced, and 46% right now, 44 to 46% have already made a price adjustment, a correction to get better in line with the market, more realistic in the last, say, after being on the market 30 days, okay? And so those numbers to whittle down to right there where you got the list of sell ratios, you have that number come down a little bit. It's not catastrophic, but it's down after they've already maybe reduced it. But here's the bigger thing we didn't talk about. How many sellers are now giving closing costs and they've already reduced their price? I mean, this is like a double hit. And it's because they didn't do it right from the beginning and get a multiple offer, which is the best way to save closing help and not have to come down in price, and maybe not have to deal with inspections and other contingencies and such involved, especially like now, maybe a home to sell contingency, or we have to do this grant or gift letter and we want to do this and we got to do that. We got to jump through this hoop and the whole 9 yards, that eliminates possibly, or you have better choices when you don't just have one or none, right? So what are you seeing as a lender? What percentage would you say have you seen it increase to where you see sellers now giving some kind of closing help concession, and 98% or 95% are giving buyer agency compensation as well, which has always been pretty normal. But we just want to focus on giving concessions to a buyer.
So let's talk about that. I'm seeing just about every contract that comes through, I'm seeing that it was below the list price, that they went in below the list price. Yes, we are seeing ones that and you and I have had a couple that, the escalation went up $50,000 for the right house.
That was so different.
And I'm seeing that more in Montgomery County, more closer to the Beltway. You still see that. but I've seen that market slow down a little bit because of the
Mhm.
government shutdown, and you're thinking about uncertainty there, right?
Yeah.
So what do I want to do? I don't want to do, it's the old, what do you want to do? I don't want to do anything. I want to stay right put. I want to go unrecognized. I want to fly under the radar. I don't want to do anything. And that's kind of the feel that I'm starting to feel around the Beltway.
Yeah. Yeah.
I live down in Montgomery County.
Mhm.
I know that market extremely well too, but that's what I'm seeing down there. More in Frederick County and in other counties, I'm seeing that the contracts are coming in with seller help or with a reduced under the list price. And there's not a whole lot of negotiations. I had one over the weekend. It was listed at $620. Price dropped down to $599. Borrower went in with justification at $575.
Mm-hmm.
They came back and the seller said $595. Our buyer came back and said $580.
Yeah.
Seller came back and said, I'm not going below $590. So because I've already dropped it $20,000, and the listing agent said, I've already dropped it $20,000, and there's a house right down the street that is the same exact model that was listed for $625 and is now under contract.
Okay.
So we're not going below. And I said, well, let's be clear here. The realtor and I worked well as a team. And I said, let's be clear here. That is not a comp until it sells.
Exactly.
Okay?
That's it.
And that's what I wanted to bring up today was when somebody says, well, that's the same exact model and that was listed at $625 and I'm not going to go below $620 because that's the same exact model. That's not a comparable until you know what it actually sells for.
Exactly.
Till it settles. Mm-hmm. So that comp goes out the window. The other two comps in the neighborhood that were the same exact models, one sold for $575 and one sold for $585 in the last 8 months.
Wow.
Okay.
Yeah.
So the one that isn't in question, it needs a new roof, which is a $20,000 expense. So that's why our borrowers were like $575, 20 grand is going to put us at $595. And we're going to be fine there. So I want to be very clear that when you're shopping for a house, when you're selling a house, when you're thinking about listing, just because a neighbor with the same model home listed at $625 doesn't mean your house is worth $625, because that's not a comp until it is sold.
Exactly.
So we don't know what that's under contract for. So the agent just called the other agent, and they can't divulge what the sales price is, but they found out that the contract that they accepted was a contingent contract.
Oh, okay. Oof. There you go.
So that's why they can get a higher number, right?
Right. Yes.
But we don't know what the sales price is, but that's not going to settle till after our people settle.
Yeah. So it's a mute point.
It's a mute point. So that's something that I found very interesting, dealt with it all weekend, over the weekend, and just want to reiterate to people that are putting their house on the market that we can only go off of what has sold.
Yeah.
Not what's
facts.
listed.
Yep.
You could list something at 700, same model, and it's on the market for 182 days. 6 months, like, okay, it's overpriced.
That's why when I sit with sellers and I show them the active comps and the direct and indirect competition, both, so they can clearly see a couple factors there. That's one of the first things I have to point out, or they do, maybe that's fine with me, is they'll say, well, that house is listed, like you said, for $800,000. Then you look at the under contracts pending, we still don't know that. And then you get to the solds and they go, oh, whoa, that seller, oh, they're overpriced. They see it then. They self-discover and go, because they start thinking like a buyer. They start to go, would you pay? No, not considering this one down the street or in our same neighborhood, the same square foot size and this, that, sold for $25,000 or $50,000 less. You're not going to pay more just because that's what's being asked of you, right?
Right. So is that how you handle? I mean, how do you explain it to the borrowers? I mean, do they get the point about because it was interesting dealing with that this weekend that
prices,
somebody was hanging their hat on
a fictitious thing. Yeah, you don't know.
As a comp.
Yeah, when
it's been under contract for 30 days and it's not going to settlement. The people it's still a kick out situation.
Yeah. So if we're having that discussion, we're having those moments with factual data. Imagine what we deal with sometimes, Terry, when it comes to condition. Now that becomes even more subjective in a way. These are factual numbers. Now you get into the subjective sandbox, and all that becomes is like, how do you, we can look at pictures of sold comps. We can't go see the house to tell the difference. But I do love pending ones sometimes. If it's got a kick out or something, we can go see that. But active homes, I love taking my sellers on a field trip if they're totally willing, which most are. And we're going to go look at what's your direct competition. And I want you to have the clipboard in your hand rather than mine, so you can clearly see how updated is their kitchen versus yours. Yours is better than their kitchen. Great. That's a plus. Their bathrooms are better, or their flooring, or this is better. You have a fireplace. They don't. You name it. We can go through and nitpick every little conditional thing. And that's important because buyers do shop value. But the other big thing I look at before anything is age of the roof. You have an age. I just had a listing this last week. They just listened to me and they said, you're right. We don't want a problem with the insurance companies being that the roof is 20 years old. They said, it's going to hurt us selling. So if we put a roof on, how much more are we going to get back? It's going to be a double great thing for you. You're going to get it all back because a buyer would crucify your asking price, not so much an appraiser maybe, because a roof is on, a roof is on, a roof is on. It's not off. The difference is, and they make a little adjustments, I should say, but the buyers are going to make much bigger adjustments in their mind than an appraiser will, right?
Yes.
Yeah, they want a brand new. If the roof's 20 or 25 years old, not only are you looking at maybe losing the buyer altogether because they're like, I ain't dealing with that. I don't want to deal with it. I don't have the money for it. You name it. A seller is smart to do these things because they clear up all of the red flags, all of the potential issues, from appraisal to insurance companies to losing a buyer. The benefit completely outweighs the cost by so much. Now, if it was an item that wasn't like that, and it was one of these smaller things, no, there's so many times I've said to a seller, Terry, no, don't do this, don't do that, don't put the money and everything into it. And they go, really? We thought that was going to make a massive difference.
We read.
Not.
We saw on the internet.
Yeah, right. Uncle Bob told me if I put backsplash up, I'll get $20,000 more. No, don't touch the backsplash. Let's deal with the roof.
Yeah, the roof is an issue because of the age. And in this case,
20 years.
And we may have an appraiser go in and say, hey, now the appraiser is not a roof specialist.
No, they're not. They normally just make notation. It's at the end of its age, have it inspected, have it certified. And of course, the insurance companies are either going to say, no bueno, get a new roof or we're not going to cover you. Or they'll say, okay, get a roofing company to come out and give us a report. Let's make sure there's 3, 4, 5 years left on it and we'll insure it then maybe. So it's really interesting to get from price, under contracts, actives to solds to holy cow, why are they all over the map? And then down into the conditional granular sand. This is why I love what I do, because most people don't realize how much data and thought is really given to be able to do this so every day to where you really can help guide people in such a great way.
Yeah. And a lot of good points there, but going back to the roof, not to beat a dead horse, but if you're selling and if you know that your roof is done, make the investment because your house will sell a lot faster.
It will faster, more,
and less nitpicking, going back and forth.
That's a great point, because think about I've had this happen. If you have a house with a brand new roof, but you have 20 other, like the toilet's loose, it needs tightened, and all these things in the home inspect. By the way, I'm getting ready to get the home inspection today from our buyer today. Okay. That's coming back from yesterday's inspection. And this is the thing. when it's funny how this works, when the roof is like new or the kitchen's just been updated, new appliances or whatever, when it's really big ticket items, all these little things that they're not a lot of money, but it's just like really like just normal, like little baby, like the buyers are not even nearly as concerned to ask for that stuff to get fixed because they're just so happy the seller put a roof on, which means for the seller,
HVAC.
HVAC new or whatever. And all of a sudden, because you've done that as a seller, it really mentally causes the buyers to shift and say, man, we'd be acting stupid if we ask for like all these other 20 things after what the seller just did.
Yes.
Does that make sense?
No, that's my thought exactly.
Yeah, that's it. You brought it up and I totally forgot about that. And that's awesome because, not every buyer's like that. Now, granted, I've had some buyers that they want a house that's 20 years old. They want to buy it for a house that's 20 years old. The price for 20-year-old home, but they want the seller to make it brand new. New roof, new HVAC, new kitchen, new bathrooms. They want $200,000 put into a 20-year-old house at the 20-year-old price. And that is just cray, but we won't go there because, Terry, I know none of our buyers think like that listen to our program. So we're good.
No, and I think that anybody selling a house that's 15 to 25 years old, you have a lot to address. Am I right?
Yeah, that's when it starts big time. Yeah. 10 years, you get the little things.
It's like selling a car with 100,000 miles on it.
There you go. Yeah, you're going to be like, the brakes. Oh, yeah, this. I should do another oil change. Yeah, it's just normal, right? So good stuff, man. That's good stuff. All right, let's talk about rate things real quick here with our time and get into a few ideas. Rates today, Mortgage News Daily app, 6.18 on a conventional 30-year. Did you want to talk about what's going to happen maybe with the feds, Mr. Powell?
So we know that he's got to cut because he's almost committed to cutting. So we're looking at 25 basis point cut. So let's talk about what that means. Right now, the prime rate is at 7.25%. They're going to cut it 0.25%. They meet on October 29th. So everybody has been asking me, they say, what do you think's going to happen with the rates?
Sure.
And cutting it 0.25%, our markets have already baked that in. I was going to say. I talk about baking it in.
Yeah, the 6.18 is baking it in.
Correct. So the market is hedging that there's going to be a 25% cut. Now, after they make the cut, he addresses the media. And in his remarks, that's what everybody hinges on. That's what everybody holds their breath for. If he comes and says, hey, based on the numbers, we're going to cut it 1/4 and we are going to hold off for a while and just be in a wait and see mode.
Mm-hmm.
That's going to cause a tremendous amount of turmoil in the market. And that's going to send our mortgage rates up, even though they cut the rates 1/4 for the prime rate. Okay.
Right.
So if he doesn't make everybody feel like this is the top of the rate cut market or cycle, meaning that he's going to cut October 29th, they're going to meet again in December before Christmas.
Okay.
So a nice Christmas present would be another 1/4 point.
Mm-hmm.
6 weeks later, into January, a nice little winter would be another 1/4 point, and do it gradually and do it, because a 1/4 point doesn't make that huge of a difference. Like if you take a look at somebody that's got $100,000.
For every $100,000 of a mortgage.
For every $100,000. Let's talk about a HELOC.
Yeah, HELOC. Okay. Yeah.
HELOCs are based on the prime rate.
Right.
So today, if you have a HELOC that's based on 7.25%, you're going to pay $7,250 a year in interest. If you just pay interest only, your payment will be $7,250 a year. That's about $600 a month.
Okay. Yeah.
So if you cut it 1/4, then you're now going to pay $7,000 a year.
$250 in savings.
Okay. So we're going to save $250, which over 12 months is $20.
$20.
But here's where it adds up.
Yeah.
Every 6 weeks for the next 3, we wind up getting down. Yep. That's what we call momentum.
Yeah.
People enjoy momentum.
Yep.
Positive, positive vibes breed positive vibes, and enthusiasm breeds enthusiasm. So that's what we're looking at. That's what we want to do. So next week we will get a cut, but everybody's going to be hanging on what he says in the meeting. So October 29th, expect some big news. 25% cut, but my projection is that he's going to make people feel good, and it's going to push the rates down even lower because
Awesome.
He knows that the mortgage rates need to come down.
Yeah.
But he's not going to do it till it's his idea.
That's it. That's it. All right. We got about 2.5 minutes in the program, Terry. Let's jump into a couple things here. Foreclosure. A lot of calls I've been getting lately. I'm dealing with a situation now that the homeowner is about 4 months to 5 months coming up late on their payments. So we never love that. That's a terrible thing. Unfortunately, it's a divorce. And so normally when it's something with health issues, job loss, divorce, death, this, that, whatever's bad news like that, this is when we start to see this happening. So it could be for a number of reasons. And, I know people, they want to pay their mortgage. They really do. So they ask, where are we at with things? How do we check on it? And of course, I always refer everything over to real estate attorney. We looked into it and we check with the mortgage company, the holder of that, and the servicer, and we go through there. And that's been always my advice. But at the end of the day, there are some ways to be able to do either a short sale if you're upside down, but a foreclosure, you definitely can avoid no problem. You just have to take the right steps, because if you do nothing, we've come out of an era where everything was in the forbearances and the COVID, and you can't foreclose. The banks can't touch you in the whole 9 yards. Terry, do you realize we had people that didn't pay mortgages for not 1 year, 2 years, but 3+ years? So that's gone. This whole redo mortgage thing and FHAs and all that.
That's in the rear view mirror.
Yeah, that's in the rear view mirror.
Way behind it.
Especially way long ago, but especially some of the loans and things from October 1st as well. So that's the big thing, is you get a 30-day letter of a reminder, 60 days, hey, you doing okay? You breathing? They want to work out, do an offer, workout, or refund, it's forbearance, whatever, first foreclosure notice. 90 days you're late, you're filing with court things, maybe action, and the list pen system in 120 days really starts to get a little bit more serious. So we'll talk about a little bit more of these ideas coming up and how we can, address some of these things on the next program, along with investor ideas, because I am working with a great investor right now, and a lot of things to think about with that and the strategy and expectations. I want to thank Connie Phillips from Phillips Insurance. Connie Phillips Insurance right here in Frederick, 301-662-5717, a good sponsor, and also Presidential Bank Mortgage as always. And you'll get their information, all of ours, at the end. We hope you have a great weekend. Happy buying and selling. Terry and I are always here for you. Thanks so much for tuning in to your Frederick Real Estate Update on WFMD 930. Take care now. All right.